Hello friends. Welcome to this week's update on tax and corporate laws. Let's begin with developments under the Income Tax Act, 1961, in the case of ATS Real Estate Builders Private Limited versus Deputy Commissioner of Income Tax. The Delhi Tribunal ruled that provisions of Section 43B were not applicable when the assessee neither claimed a deduction for GST nor debited it to the profit and loss account. The assessee had filed its income tax return, but the assessing officer disallowed GST payables under Section 43B due to a mismatch between the audit report and ITR 4. The assessee explained that the GST amount was not charged to the profit and loss account and was instead shown as a liability. Since the amount was never claimed as an expense, the tribunal held that the disallowance should be deleted. In the case of Hemlata Charities vs CIT exemption, the Mumbai Tribunal held that a trust could not be granted final registration under Section 80G if its object clause allowed expenditures outside India without limitation. The trust's object clause included scholarships for students and medical aid to people both in India and abroad. The tribunal ruled that unless the relevant clause was modified to limit expenditures to India, the trust would not qualify for 80G benefits. In the case of Jindal Saw Limited versus Deputy Commissioner of Income Tax, the Delhi Tribunal ruled that an excise duty refund received under a government incentive scheme was a capital receipt and not taxable. The assessing officer had treated the refund as a revenue receipt, but since the tribunal had already held in previous years that such refunds were capital in nature, the ruling was upheld. In the case of Jamshed R. Bilimoria vs Income Tax Officer, the Mumbai Tribunal addressed the issue of TDS credit for a private trust. The assessee had claimed TDS credit on income earned from the trust, but the assessing officer denied it as the credit did not appear in Form 26AS. The tribunal ruled that the TDS credit should ideally be reflected in the assessee's account rather than the trust's, and since the Commissioner, Appeals, had directed verification of the claim, the assessing officer was instructed to facilitate the transfer of the TDS credit from the trust's Form 26AS to that of the assessee. In the case of Ma Danateshwari Maize Processing and Marketing Cooperative Society Limited versus the Central Board of Direct Taxes, the Chhattisgarh High Court ruled that rejecting a stay application solely due to non-payment of 20% of the disputed demand was improper. The assessing officer had failed to evaluate whether interim relief should be granted. Consequently, the court set aside the order and directed reconsideration of the matter. Now, let's move on to important updates under the GST law. The Jharkhand High Court ruled that an order under Section 74 of the GST Act was invalid if the assessee was not granted an opportunity for a personal hearing. Sections 75(4) and 75(5) of the Act require such hearings, and as this requirement was not met, the demand orders were set aside. In another significant ruling, the Supreme Court dismissed an SLP filed against a High Court order permitting the correction of clerical errors in GSTR 3B beyond the prescribed time. The High Court had ruled that rectification should be allowed since there was no revenue loss to the department. The Supreme Court upheld the decision, emphasizing that the right to correct clerical errors is integral to conducting business and cannot be denied without valid justification. The Delhi High Court ruled in favor of an assessee who challenged the retrospective cancellation of GST registration. The court held that the department must provide valid reasoning for such cancellations, and they should take effect only from the date of issuance of the show cause notice. Accordingly, the court set aside the retrospective cancellation in this case. Now, let's discuss an important update under the Insolvency and Bankruptcy Code. The NCLT Allahabad ruled that a bank's application under Section 95 against a personal guarantor of a corporate debtor was invalid as the guarantee had not been invoked. The tribunal held that the application did not satisfy mandatory requirements and was therefore dismissed. A major development is the engagement of Ernst & Young, EY, by the Lok Sabha's Select Committee to review the curriculum of CA, CS, and CMA courses. The objective is to assess whether company secretaries and cost and management accountants should be allowed to conduct tax audits, which are currently reserved for chartered accountants. The decision, which could significantly impact the tax audit framework in India, will depend on EY's findings. That's all for this week's update on tax and corporate laws. Stay informed, and see you next week with more updates.